Let's talk about land tax. What is land tax, Vish?
All right, so look, this is pretty similar for most states, but I'll focus mostly on New South Wales. So it's a tax on the land value of the property that you own. And it's not calculated a property at a time. It's calculated on your portfolio. So I, as an entity, might have an ownership interest in 10 properties. All 10 of those are going to contribute to my land tax bill. So it's calculated based on the unimproved land value, which is similar to what you see on your council rates. Big difference, council rates, you'll see your value change every 3 years. Land tax, you'll see it change every year. So there's an annual valuation that's done by the Valuer General of New South Wales. Unimproved land value, meaning it's just the value of the land, not any buildings or improvements on it. And then, essentially, so what we do is we take those values annually. We work out the 3-year average for the last 3 years on a particular property. And then we add up all of your property portfolio and we say, all right, this is how much land tax you're going to pay. It sounds simple when you put it like that, but there's a lot more that kicks in. Like I said, some entity types have different threshold entitlements and things like that. And then the other thing that makes it a little bit more complicated is when you have multiple ownerships going on. So for argument's sake, Ben, if you and I owned a couple of properties together, we would have a land tax account together, assuming that we cross the threshold. And then I might have a couple of properties that I own with Bryce, and I might be paying land tax there. And I could do that with so many people and receive multiple land tax thresholds. So what ends up happening there is there's a bit of a wash that happens. We call it primary and secondary ownership. So then I'll also be looked at as an individual to make sure that all my ownership interests are considered and that I only get the benefit of one threshold. So I might end up having to pay a little bit more if I've got lots of joint ownerships happening.
Oh, there's a bit in that.
There is a bit in that.
We'll unpack thresholds and all that in a second. A couple of things I just want to touch on. Obviously, if you and I were in ownership and I had 10% and you had 90%, that comes into consideration in terms of the proportion of tax that I pay, correct?
Correct. So how that works is, so jointly, when we own a property jointly, we're joint and severally liable to pay the tax. Any joint ownership that you have will receive the benefit of this threshold that I was talking about. There is a tax-free component to our threshold for land values up to about 1,075,000 is what it is at the moment. So essentially, once you cross that, you are paying land tax. Now, for argument's sake, Ben, just if I was a 90% owner and you were a 10% owner, that's fine. Now, let's just say we only own one property together. The value of that doesn't quite reach the threshold. The reason that we do this whole primary, secondary, assessments is I could duplicate that type of ownership structure 10 times with 10 different people, right? And get a tax-free threshold every single time. And the reason that it's done that way is not to disadvantage the other person that's purchasing with me or the other entity, right? So they're still entitled to thresholds too. And so that's why we do that primary, secondary thing. It's to make sure. So when that secondary part kicks in, yes, they're considering me for 90%.
So, but the joint and several liability point that you just raised, that's basically saying that if you don't pay your portion, I'm still potentially liable because I've got interest in that property, and I'm
just for the property that we own together.
Yeah, but I'm liable for 100% of that. So the proportionality of ownership is not necessarily considered when the government's potentially collecting that revenue.
Yeah, when it comes to collections time, any joint owners can be held, joint and severally liable to pay land tax, regardless of ownership percentage.
Okay.
It's more at that secondary level where the ownership percentage really kicks in to make sure that the tax is being calculated equitably for everyone.
No, it's a good reminder for people about joint several liability around going into partnerships into property, in the sense that what I said initially was surely I'm only reliable for my portion of ownership, but that's not necessarily the case. So it is a reminder to people when they are thinking about going into agreements to buy property assets together. And I think there's the first takeaway from why these episodes are so important, because we're learning so much.